Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
There goes the bell at 11,500. 11,502, 3, 5 at this point in time. 5, 6, 7, 9. Okay. 11,508, 9 is where the Nifty has opened. Nice to see that big number over there. Up 1/3%. The Sensex is up 150. That's 38,000 scaled very emphatically. And 38,090, not yet quite made it to 38,100, but within touching distance. The Nifty Bank is the one that's doing much better. It's up about almost 0.5%. 128 up on that index. 28,260, 265 is where it's dilly-dallying. And the mid-cap's also doing very well, 0.5% higher. Advanced declines very sturdy. 3 stocks in the green for 1 in the red. L&T is the king of the Nifty at the moment, up 4% on the buyback news. Coal India, Yes Bank, ONGC, GAIL, Hindalco, HP, NTPC, Tata Motors are the other stocks that are up 1%. Very short red list. Infosys heads that list. It's down about 3.6 after that CFO resignation news. But I would dare to say that they're all run up on the rupee weakness news, and the dollar now is cheaper by about 50 pies actually compared to the highs that it touched last week. 70.30 we saw for a goodish bit on Thursday, and that coming down to 69.80, 50 pies knocked off is what's taking off some money from Tech Mahindra, TCS, HCL Tech, all of them in the red, but very, very marginally. Infosys the only one which is showing a 4% downtick. Titan is down about 1.4 after the CFO told us that demand is somewhat soft, and instead of 25% growth, he may look at 20 to 25 at this juncture. Mid-caps?
Well, the mid-cap index is doing well, in line with the frontliners, up almost about 0.5%. The market breadth is good, 3:1 in favor of the advances right now. In terms of individual stocks, Britannia, Yes Bank, HUL are names that have hit new highs from the frontliners and the broader market stocks. In fact, consumption is on fire this morning. Future consumers, future retail, Avenue Supermarts. It could perhaps be that Reliance retail story. You know, the entire consumption basket has been sort of broadening. Titan, you spoke about how there's a downtick there. Talking about some losers because of the impact in Kerala, you could see a couple of these stocks. Federal Bank is under pressure. Muthoot Finance is down a tad bit. Apollo Tyres has 2 plants in Kerala, in Kochi and Perambra. Of course, the management has told us unofficially that none of those plants have gotten impacted, but still there's a bit of a sentiment move there. Aster DM also has some operations in Kerala. That one is under pressure right now. And Rain Industries, we've spoken about that. That stock too is now down almost about 5%. So yes, there are many losers that you're seeing in the market. Mid-cap IT is coming in for some profit-taking, NIT Tech, Cyient, etc. Infosys, by the way, is still down about 3.5%. Mindtree, Tech Mahindra, the whole lot actually is under pressure this morning from the IT space. But otherwise, it's a decent opening for the market, you'd have to say. L&T is your big mover at the moment. And a couple of these pharma names continue to be on the upside. Stride Shasun is up about 2.5% right now. So 11,500 has been scaled, Anuj. Slow and steady, but, this market uptrend continues.
There's no aggressive selling at 11,500. That, I think, tells me that perhaps today could be a really interesting and good day for the market. By the way, Apollo Hospitals, just one-way move on that one continues. And, this is what we discussed earlier as well, coming out of multi-year bear market. And there was minor decline on Friday, perhaps, towards the end. But that's a stock, Apollo Hospitals is the stock that I'm talking about. That one's also making a fresh move.
The logic on Yes Bank, I just want to point out, Rana Kapoor's term ends on August 31st. Now, the Reserve Bank has not yet replied about the renewal of the term. If they were going to refuse, they won't wait up until, the last week of August to refuse. So I think the market is now saying that if you have not given, then obviously in the last week you are going to say yes. You're not going to put a shocker and say no at this juncture. So that could be one reason also that's prodding that stock.
Okay, perhaps. But Ashwini, your thoughts on market opening? Are you buying here?
So yes, we are buying because if IT is down 160, you need a large move for the bank Nifty to take the market higher. So in that sense, probably banks will outperform today and take this market higher, because in the early morning, I don't think there is great amount of selling or, trying to make this a false breakout. So my sense is at least the first 2 or 3 hours should be positive, and particularly banks may be doing well. And this Kerala story, I think the point we are missing is that when such things happen, unfortunate as they are, demand picks up. Like, Gujarat earthquake. By the end of the day, L&T, etc., they all started moving up because reconstruction is needed. If shops have been destroyed, they need to restock. So, you need to look beyond this if you are an investor.
Okay, by the way, the stock that's breaking out now is Tata Steel. Just pull out the intraday chart on Tata Steel. Of course, Manisha was talking about steel prices hitting new highs on, on Shanghai, Rebar. Of course, there's a US-China summit which is on. So, steel in general looking quite good. Ashwini, your thoughts on metals?
See, metals are kind of sideways, possibly going through a pullback rally. I don't think there is great amount of, fresh highs or, really a bull cycle in metals that is on. On good market days, they'll participate with the market. On, bad days, they'll go against. Once, US dollar appreciates, everything that's denominated in dollar tends to come off. So that way, I don't think commodities are greatly positive.
Okay, Sudarshan, I wanted to ask you about L&T. It's reacting to the buyback news, but what are the charts saying?
Well, the charts are not very upbeat. I would say, if you have it, then it's a good time to sell it off. I would not enter it at all. For today, apart from the fact that we are long in the Nifty, there are two buying opportunities, Reliance and Yes Bank. You want to wait for the markets to stabilize and then buy these two stocks, but go long.
Okay, so Yes Bank now hitting that 400 rupee mark, almost there. New highs for Yes Bank. Talking about new highs, Page Industries and Britannia doing what they do best, which is making new highs. Once again, both these stocks at record levels. Look at that on Page, almost at 35,000 now. Mitesh, any thoughts on any of these names that we discussed, or anything else for that matter that you've seen that you would trade this morning?
In fact, I had picked up two stocks which you have just mentioned. Yes Bank, I think Sudarshan also highlighted. Clearly a good breakout. Ashwini was also quite positive. I think it's looking like 430, 440 should happen here very soon. And Britannia just made a fresh high. The expansion has again started. So I think this is heading towards 6,900 to about 7,000. That apart, I think couple of positive names. I think Coal India looks like showing good continuation on the upside, while something negative is happening on the charts of Federal Bank, and I'm just trying to figure out why this bank is looking weak, but the intraday charts are suggesting a breakdown.
Yeah, Federal Bank, if anybody loses from the Kerala problem, it should be Federal Bank. They are headquartered in Thrissur, which is in the epicenter of where the problem is. Yeah. But I'm still of the view that there could be some kind of forbearance extended by the Reserve Bank. And I wanted to just point out to all the other public sector banks, they also are doing well. I think, Ashwini, you had Canara in your list. Would you add any other?
See, basically all corporate-facing banks are doing well. So, Canara, BOB, State Bank, which is up more than 1%. So, anything corporate is, for the moment, moving up.
Okay, by the way, the stock I wanted to point out was Infosys. It started 3.5% lower, but there's a huge bit of buying which happened just about 3 or 4 minutes back. There's a big bar on the upside if you are seeing it on the future screen. Ashwini, what's the big call for the day then?
Well, A, buy Infosys, and B, I think because of Infosys recovery, the market has crossed that 10,500, 520. So get ready for some strong short covering to take place. I would think beyond 10,520, the shorts will realize that the time is up, and probably the covering was likely to come in stronger and probably much before than anticipated, because if Infosys stayed low and you're hanging around 11,500, then things could have gotten difficult. But if IT and banks both start to fire, then chances are the market can get beyond this 11,550 zone.
Trending day, you think?
That's possible.
Okay. All right, gentlemen. In that case, we'll have more occasions to come and seek your advice. Sudarshan, Mitesh, Prakash and Ashwini, thank you very much for joining us this morning and taking us through the early opening rates as well. The market's in an extremely comfortable position as far as the bulls are concerned. And as Ashwini was saying, now there may be a bit of a scared bear move as well. 11,520 almost as we speak, and that's not even the best performing index. The best performing index is the Nifty Bank, which is up about 170. Both private and public sector banks moving, and the mid caps giving so much support that the advance declines is almost 3 stocks in the green for
And
one.
you know what, the fact that Infosys is now making highs of the day, and of course the other stocks also supporting, could mean some really interesting stuff, because we are sustaining above 11,500 now. Andrew Holland, CEO of Avendus Capital, is with us. Andrew, good morning. Markets at new high, 11,500. Your thoughts?
Well, it's tempting to kind of throw cold water on it all, but markets, I mean, it's great that we're at a new high, but it just kind of feels a little bit like, you know, December of last year coming into January, when, you know, everything was looking good, but you know, at that time, you know, the turmoil was in the bond markets, and the turmoil at the moment is in the currency markets, and whilst you're getting some rallies in the metals, commodity prices are still way down from their highs. So usually it leads to the equity markets at some point. It's not happening at the moment, but it normally does. So we just have to wait to see when that day is. It's not if, it's when. All of this turmoil in the currency markets does impact the global equity markets. So as usual, I'm a little bit skeptical, but have been all the way through, actually.
Okay. Well, so if you have to play a long shot in this market, what may be short candidates at all? Andrew, it looks like it's firing on all cylinders.
Yeah, it's a difficult, you know, in terms of, you know, saying which sector is going to underperform. There are underperformers, obviously, but you could just have it. It's very rotational, as you've been pointing out for many days now. So you have to be very active on your hedging strategies in these kind of markets. But you know, our favourite sectors remain our favourite sectors. We haven't really changed. I think the one thing I would say is that I think possibly the rupee has done its course in the short term. I think the only pressure would be if the China-US trade talks fail. That would put further pressure on emerging market currencies, including India. But I think we're there or thereabouts done in the short term on what we can see so far.
Okay, by the way, the space to be in right now is pharma, because a lot of these stocks, remember, had big rallies last week. Once again, names like Glenmark Pharma is up 4%, Cadila Health is up almost about 3% Stride Shasun, and the Nifty Pharma index itself has moved to the high point right now. So looking pretty good there. Divi's Labs also added to that list, up about 3%. Andrew, hi, good morning. I want to ask you about pharma, but before that, what do you do with, you know, stocks like Infosys? I mean, not talking specific stocks, but when companies that are in an uptrending sector go through some problems of their own, do you think this is a good buying opportunity?
See, we like the IT sector. We think a lot of the problems that they've had in the past are starting to ease off. It's not fully gone, as we've seen, obviously, with the management change there. But you know, it's a sector that's in transition. We're starting to see some reasonable growth. It's not going to go back to the heady days of the 90s, that's for sure. But you know, you're getting some reasonable growth. So I'm more constructive on the IT sector. And these kind of things, you know, you're bound to see as a company keeps changing its you know, its kind of way of thinking and the way it operates. So you know, there'll be people who, you know, do not believe in that or don't like the change, and therefore move, and that's okay. It's not I don't see it as being a real problem.
Okay, well, I guess the toast of the last 1 month have been the corporate lenders, Andrew. We saw fairly big rallies in the Axis, in the ICICI, in SBI. And right now I'm reading a Credit Suisse report which says that after 6 years of rise, NPAs were down 20 basis points to 11.5% in the first quarter, confirming their thesis of NPA levels having peaked. And the drop in NPAs was on the back of write-offs. Obviously, some big write-ins are expected if the SR case is decided in the NCLAT this week itself. That's 37,000 crores, a sizable chunk, much of it provided for already. So an improvement in P&L can be expected. Is all that in the price in the corporate banks, or would you still buy them?
We like some of the corporate banks, but this whole thing about the NPA slowing down and it's we'll get recoveries. I think that is priced in to a lot of the banks in terms of the expectation. But what you've got to now look for is that as India economy continues to grow, is who's going to be the market leader and who's going to be able to lend to the corporates, and that's where the private banks and some of the more better corporate banks will do very well. I'm still sceptical that the PSU banks will be able to deliver in this kind of rally. They just don't have the balance sheet to do it. So I think that I still think we're 1 to 2 quarters away from being more constructive on PSU banks. I still think there's quite a lot of headwinds for them in the shorter term. So you will get these relief rallies on expectations, but it's then delivering the growth thereafter, and I just rather be with the better banks for the time being. It's tempting to look down, but it's not tempting enough yet.
Okay.
When you say better banks, you mean the retail guys, or you mean the better of the corporate lenders?
Yes, both of those, latter, yeah.
Okay. Both of those.
A lot of stocks doing well, by the way, right now, and I think the stock that's surging is ONGC. Just put out the intraday chart on ONGC.
Why?
No,
is
I think
the foreign listing, or is it?
No. There's a report in Financial Express which is saying that the government may exempt ONGC from subsidy sharing even if crude goes beyond 70. I mean, if that is the case, then obviously ONGC is looking at re-rating. Though, I mean, I'll have my doubts whether there's a proposal like that can go through. But that's the reason that you're seeing this kind of move, stock up about 3%.
At the moment, there is not much of a subsidy burden at all.
It's not, but the risk is if crude goes above 70. In that case, the reason
crude is above 70.
It is 71, 72.
Okay.
70 as in the overall
Average.
net realization, the Indian crude basket. I mean, we're hanging somewhere around there. If it goes above that, then perhaps there's a bit of a risk factor. So that's the reason. But that's a Financial Express report. The stock is reacting to that. But in the past, of course, there have been issues on this one as well. Andrew, so going forward, what do you do in a market like this? Because we've discussed problems all year long, and the markets keep making new highs. The broader market, of course, struggled in the first half of the year, but even that's making a bit of a comeback.
Yeah, so you're right. It's you just have to sometimes wait for a correction if it's coming. That is, my belief that it is because of what we're seeing from the currency markets and the commodities markets. But let me think about it in two ways. Let's say there's a trade war with China and the US or the European Union. Then India does stand out as a domestic-driven economy. It might take a bit of a hit on the currency in the short term, but that means it's a relative outperformer, and I think that's good news. And I think that's what we've been seeing recently. But if I take that the trade wars actually doesn't happen, and we go back to kind of global growth, then the prospect then is obviously higher interest rates globally, and the fact that you'll have that impacting emerging markets again, then probably India becomes a relative underperformer because the export countries will be the ones which you'll be looking to increase weightage to on a global basis. So it's kind of one of those double-edged sword for India at the moment. It's looking good in a more fraught kind of global environment in terms of trade, but if we go back to growth again, then obviously we're going to face those headwinds of higher interest rates, which will probably quickly start to happen from September onwards. So it's where you place the bets on the trade talks between China and the US in the short term.
The biggest money spinner over the last 6 to 12 months, Andrew, has been in the consumption basket. I mean, most of these stocks are still sitting at all-time highs. But this morning, we got some disconcerting views from the management of Titan, where they said that there is slowdown visible. And, the months of August, or rather, the last couple of months have not panned out too well. Do you think this sector has peaked in terms of growth, or are there still opportunities here?
No, I still think there's opportunities. I don't think the consumption story is going away from India for a very long time. You're going to get these periods of companies, parts of the industry not doing as well in the short term, but over the long term, the consumption story is something you have to play. in terms of the longer term growth, and you're seeing it in terms of top line and bottom line profitability from all of the companies. So I think the GST introduction is just the level playing field is there, and that's going to be a big kicker for earnings over the next 3 to 5 years. So it's not any setback is an opportunity for us.
Okay. Yes, consumption story still going very strong, and that explains why there are so many people, Alibaba and Amazon and Reliance and everyone competing for a pie. Andrew, what about pharma? I mean, it has a rupee tailwind now, and it seemed to be emerging from the shadows.
Yes, depends how you kind of describe the shadows, but I just can't force myself over the line with this sector. It's kind of been beaten down. You can put it into the view that it is where the IT sector was 1.5 to 2 years ago, so therefore there's value. But tomorrow I'll wake up and find out there's another US regulation which has hit one of the companies, or the drug pricing's under pressure. So I'm not overly convinced. I can see why you dip your toes into this sector. I can see why you'd want to do it, but fundamentally I'm just not convinced.
Okay, then before we let you go, we have to ask you about Man U. I mean, the season has been quite tough, right? We saw it with the game yesterday. I think there was a final nail in the coffin. You think it's going to be a hard one for this
You
one?
should not be saying that. Arsenal are in relegation zone.
Well, I'm talking in isolation, okay? I can talk in isolation as well.
Yeah, well, two things on that. I think one, our defence is as bad as Arsenal, so that's the big takeaway. But actually, I'm really reeling from the fact that the captain of Manchester United actually said, my attitude was wrong. I just can't understand the captain of a football team saying that.
Yeah. I think they're letting.
So
okay,
I'm kind of
sorry. Go ahead, Andrew.
No, I'm just, I just feel that, it's the demise of United in a lot quicker if that's what the players are thinking.
Okay.
And it's terrible.
And I was actually going to take the conversation to another game altogether.
No, it's not the United.
Got away from an innings defeat by a whisker, Andrew. I mean, it would have been a follow-on yesterday. If only, just a few runs. Do you watch that match at all? Okay.
Okay, I think we've lost it. But the point that he made was quite valid, right?
It's not the United that I've grown up watching. It's obviously, it pains, obviously. But then, you move on. But
Mourinho had predicted it. He said the season would be tough.
Yeah. Come on, yaar. We were about to give them a follow-on. Why are you talking about a match where India is not involved? Here are our boys doing so well. Think of that.
I know. I agree.
All right. I think we'll have to move on now. The market's still celebrating. Any index you pick is up about 0.5%. Sensex up 0.6 actually. That index, the grand old index, is up 220 at this point in time. So great going as far as the bulls are concerned. 11,525 is getting consolidated now. And the mid-caps as well chipping in with an equal measure. The advanced declines 3 in the green to 1 in the red. Well, let's get to another stock now. Apollo Hospitals has posted a largely inline set of earnings, while the hospital EBIT improved and pharmacy revenues came in quite steady. Higher finance costs and depreciation hit the profit this time around. Sunita Reddy, Managing Director of Apollo Hospitals, joins us now. Good morning, Sunita. Thank you very much for joining us. Well, before I come to your results, which now, of course, the market has digested enough, I wanted to ask you about your take on the way in which the Ayushman Bharat is evolving. Are you seeing a decent chunk of business coming there, volumes, if not margins?
I think it's a good beginning, and in its present form, I think, for a hospital like Apollo, we're not looking at a large impact. We do believe that our tier 2 city hospitals will have increased utilization. So yes, we can look at some volumes, but right now we're looking at creating clinical processes for those who fall within Ayushman Bhavan. and also looking at capitating maybe 5% of our beds.
Sure. Sunita, hi, good morning. You know, the stock has gone up almost 30% in the last 1 week. And the reason why investors are very enthused is the fact that a lot of your loss-making ventures are now breaking even. So, you know, your new hospital's EBITDA is now almost 11 crores versus a loss that you saw same time last year. Tell us about what are the measures you're taking to increase the operational performance of some of your new hospitals, and what kind of growth can we see over the next few quarters?
So the mature hospitals, you know, are growing by 10%. The new hospitals have grown by 27%. And we've also seen, you know, the pharmacy has also grown by 20%. I think all this added to a revenue growth of 16% and an EBITDA growth of 31%. So what are we planning to do over the next few quarters? Clearly, we're looking at how we can improve our clinical work. We're looking at getting more doctors on board in our new hospitals. We're focusing on our centers of excellence so that our POB moves up substantially and our case mix improves. We're also looking at cost optimization. So this is the second thing that we're looking at. And I think that's really showing in our margins this quarter, which have improved by about 120 basis points. Okay. The third thing that we're looking at is rationalizing, you know, looking at how we do the kitting for each of our clinical services.
Okay. Sunita, you all have a hospital in Pattanamthitta, right? At Pandalam?
Where exactly is
this? This is in Kerala.
Which state?
Kerala.
Pandalam.
You have a hospital?
No, we don't have a hospital in Kerala.
Okay.
We don't have a hospital. No, we don't have, but we are happy to help and planning to help the people of Kerala with the trouble that they're going through at this time. Our deepest sympathies for all of them.
Okay, so two quick questions, and before we let you go, Sunita. One, you said you're looking at various cost optimization methods. What would they be? And two, how much could the new hospital's occupancy rise to from the current 60% that it's currently at?
So if you look at the last one, you know, in the sense of asset utilization and how we improve occupancy, currently across the board we're at 65% occupancy. I think we have the potential to move to 75, especially in the new hospitals where the occupancy is at 62. So this is the plan for the new hospitals. With regard to cost optimization, you know, we're looking at kitting for each of the surgeries, and we also have rolled out assured pricing plans.
Okay.
So that in this manner we keep our margins intact.
Okay. You said the Navi Mumbai hospital is almost breaking even. How much can it add to EBITDA in FY19?
Yes. About, I would expect, you know, double-digit figures, close to double-digit figures.
Okay. Generally, you said your capex is over and now you all will be able to show better utilization. So should we see an improvement in margins, because this must be the next few quarters of improved operational leverage?
Yes, you will definitely see an improvement in margins. I think we've demonstrated that this quarter with 116 basis points improvement in margin, and going forward we expect to show much better margin improvement.
And finance costs should fall, no? If your capex has peaked, this quarter we saw it rise.
Pardon, can you repeat?
Finance costs, your interest costs should start to fall, isn't it, if your capex is over?
Yes,
I'm asking because last quarter it rose by a bit.
Certainly, yeah. Yeah, I think we are at the peak of our capex cycle, and by the end of this year you will see interest costs drop.
Okay, just one final question then. The Navi Mumbai hospital is still seeing some minor losses. By when can we expect that hospital to break even within this fiscal itself?
It's already breaking even, so yes, this fiscal definitely.
All right, we'll leave it. All right, we'll leave it at that. Thank you very much, Sunita, for joining us with the latest on the company. Its performance, capex is over and done with, so expect an improvement both in operational leverage, margins, and in revenues. Well, let's shift focus now to another sector, which has absolutely been the vanguard, especially after the rupee depreciation. The rupee depreciation obviously making news all of last week. The currency scaling 70-30 lows, new lows in response to the lira crisis and, of course, our own internal trade deficit issues. To discuss how much this tailwind can bring benefits to IT companies, we are now joined by Rosto Ravanan, Managing Director and CEO of Mindtree. Good morning, Rosto. Thank you very much for joining us. That really is the first question. It is 70. It looks unlikely that it's going to go much lower from here, the dollar that is. So how do things improve for you? On a percentage basis, how much can EPS improve?
Hey Lata, thank you. Thank you for having me on the show. Always happy to be here. Before I answer your question, wanted to congratulate you, and I've been a recent fan of your Indianomics show. I think it's coming out really well. Okay. You have a nice balance of asking tough questions, but also teasing out the speakers to give out interesting information. Greatly enjoyed the show over the last 2 or 3 weeks.
Thank you. Thank you.
Coming to your question. Let me answer it in 2 perspectives. Mathematically, about 1% change in the rupee is a 35 to 40 basis points impact to our margins. As an exporter, depreciating rupee benefits margins and appreciating rupee hurts our margins. But the mathematical equation is about a 30 to 40 basis points impact for a 1% change in the rupee. But I want to zoom out of the mathematics for a second. Every year over the last 3 or 4 years, we've seen a similar phenomenon where suddenly something happens and the rupee hits a new, a new spike. We want to keep the spike aside for a second. Want to share with you and with your viewers that what's more important is the average for the quarter. If the rupee, for example, starts recovering from tomorrow morning, theoretically, and gets back to the 67, 68 for the rest of this quarter, that is what is more important for us at one level. The second is at what level does the rupee end on the last day of the month? Because a lot of the accounting, impact happens based on the closing rate. So individual spikes during the quarter mean little lesser than the quarter average and the quarter ending rate.
Okay, so Mr. Ravanan, good morning. On an average, what kind of margins do you think you can clock X of the currency move? Because if you look at the last 4 or 5 quarters, you've been in the range of around 11% on the downside to as high as about 16% on the upside. Over the next few quarters, can you guide us to what the margins may look like?
Like we have shared before, officially we don't give guidance, but again, like we've shared before, for full year FY19, we are on a trajectory to improve margins compared to FY18. We recognize many things went out of our control over the last 2 or 3 years. Margins took a beating, taking a lot of conscious efforts to bring margins back under control. Like you saw over the last 3 or 4 quarters, we made progress, and this year as well, on a full year basis, we are committed to improving margins at an operational level, X of currency. Anything comes or goes because of currency is over and above that, but operationally, we are confident that we will improve margins over last year.
Okay, what about revenues as well, Rosto? Not just even your language was extremely optimistic in terms of deal wins, but other IT companies are also speaking very optimistically. Should we assume that the size and number of digital deal wins are rising?
Two parts to your question, Lata. Firstly, we are very confident of our growth. If you see over the last 2 or 3 quarters, whether it is quarter-over-quarter revenue increase or in terms of underlying factors like deal wins, etc., have been very strong. The business still will have quarterly volatility, so you can't expect a straight line sort of growth momentum given the nature of the industry at the moment. But speaking only for Mindtree, I think we are confident of our full year growth this year compared to last year as well. Second part to your question, yes, we are absolutely seeing an increase both in the size and complexity of digital deals. The expectation that we are getting from many of our customers is that they started with transforming their front end, maybe one brand or one geography, and now they are doing a complete left to right transformation of their front end. We are in the middle of a similar kind of a journey with many of our clients right now. While we are in the middle of that, we are beginning to see the front to back kind of transformation where the customers are even digitizing their core operations, core in IT landscape at the moment. So we are beginning to see, both in terms of size and complexity, much larger deals in digital.
Okay, that's very good to hear. You can't tell us about what the exact trajectory in margins can be, but can you at least tell us what the impact would be because of the recent headwinds, whether it's, the people you've added in the current quarter, the wage increases because of promotions, or even the investments that you've made in areas beyond digital? All of this put together, what impact could it have in the next few quarters?
In Q1, we pretty much completed the majority of our salary hikes for this year. Q2 will have a smaller impact because of promotions and some of the investments. But by and large, I think we will be in a stable margin trajectory for the short term and rising margins over the rest of this year.
Okay, that's good to hear. Thank you very much, Rostov, for joining us with a fund of information on how things are panning up for the IT sector. So better margins, better and larger deal wins on the digital front. And no surprise that all IT stocks have a great tailwind from the rupee as well. At the moment, the market itself is on fire. The Sensex has scaled 38,200. It's 275 up, that big index, and 70 up on the Nifty almost. That's 11,540. Huge trending up. The first hour has been extremely great for the bulls, and it looks like the scared bear is back. But we'll have to wait and see whether he can take it higher. The mid-caps as well up 0.6. I mean, it's a big, big day for the bulls, you will have to say. We have even stopped celebrating. The drum beats are not coming because it's becoming so routine that with every passing, 10 minutes, the index appears to be scaling a new high, and leadership coming from across the board. So it's L&T, ONGC, Coal India, Yes Bank, Tata Motors, HPCL. That's the top 5-6 set of stocks which are up over 2%. Big day for the bulls.
Big day for the bulls. And once again, today the market gave a full toss in first hour in form of Infosys, opening 4% lower, and that loss is now down to 1.5% on Infosys as well. So intraday, there's been 2.5% recovery on that stock. Just look at that. Okay, we'll take a break. Up next, of course, our technical experts will be back for fresh trades. Also, management lined up. Madhu Nair, CMD of Cochin Shipyard, will join us.